joining us today.
Welcome to Lesson 2 in the series of 6 lessons in the Introduction to Social Security Disability Benefit Programs and Work Incentives. This lesson will provide a basic introduction to the Social Security Disability Benefit Programs. So what are our objectives in the next hour? Hopefully, by the time we finish with this hour, those of you watching will understand the basic eligibility criteria for both Title II disability benefits and SSI benefits. And that's the beginning of a separation of those two that will carry throughout the rest of these lessons. There are 2 very different programs. Second, we hope that you're able to describe Social Security's definition of disability and the disability determination process. Third, we hope that you can identify and describe the basic program concepts that distinguish the Title II disability benefits from SSI. And finally, we hope that you can describe the interaction between the 2 disability programs for concurrent beneficiaries. And concurrent means individuals who receive both a Title II disability benefit and an SSI benefit. So let's begin with some very basic facts about Social Security's disability programs. And this is where we'll start to uncover some of the misconceptions that you probably have about how all of this works. First of all, there are 2 completely separate and distinct programs. There is disability insurance, SSDI. Also, throughout this lesson, we'll refer to that a lot as the Title II disability benefit programs because these programs were authorized by Title II of the Social Security Act. Social Security refers to benefits under this category sort of globally as SSDI, or Social Security Disability Insurance, but there are actually 3 different benefits under this larger umbrella. That's probably something new for you already. And secondly, the SSI program, the Supplemental Security Income Program, which was authorized under Title 16 of the Social Security Act. Another reason why sometimes you'll hear people refer to the SSI program as Title 16. Rare, but you do see that on occasion. Now, for adults, Social Security determines disability for both the Title II disability benefits and the SSI program using the same criteria. All right, so that's for adults. An adult in the land of Social Security is anyone aged 18 and above. All right, now an odd thing you may not have realized is that in the SSI program, there is a separate definition of disability for children under the age of 18. So there's one definition for kids in the SSI program, and then there's the adult definition of disability for 18 and above in the SSI program, and that definition is the same as the definition for the Title II disability benefits. I know that's confusing. So let's look at this definition, and this is the adult definition, the one that's most common. So here it is, and this is quoted: the inability to engage in any substantial gainful activity by reason of any medically determinable physical or mental impairment which can be expected to result in death, or which has lasted or can be expected to last for a continuous period of not less than 12 months. Well, that's a mouthful, but there are 3 really important concepts within this little quote, and let's break each of these 3 down and talk them through. So first, you can see from that definition that there's an earnings test in these programs. So individuals must either not be working at the time of application, or if working, countable earnings must be less than a designated dollar figure known as substantial gainful activity. Now, this dollar figure is established every year. And although we don't lecture containing those figures, we have provided you with handouts that indicate what those figures were for this year, and then all prior years. That's part of your handouts for reading, or in the additional resources material. So if you're dying to know what that guideline is, we do provide you with that information in the handouts. There's also a medical test, and that is that an individual must have a disability which can be documented by a qualified medical examiner. Now, the disability must meet a certain level as described in the listing of impairments. If you ever want to find the listing of impairments or read it, it is public. It's available on Social Security's website, which is simply socialsecurity.gov, okay? And you can type in listing of impairments under search, and it will pop up. It's lengthy, and it is kind of interesting to look at because all the different types of disabilities are separated by broad category, and then each type of disabling condition or impairment has a separate explanation of when that impairment would meet what they call listing level. That's the point at which your disability would qualify you for benefits. So it is not something that those of us involved in WIPA work read a lot or are expert in, but it is public information if you ever want to look it over. So not only do you have to meet a certain guideline for your earnings, because remember, these are wage replacement programs. They're for people that have significant disabilities and whose disabilities prevent them from working at a self-sustaining level, right? So we have the earnings test, the first one, then the medical test. And then finally, there is the duration test. The disability has to have lasted, but when you apply, already for 12 consecutive months, or be expected to last for 12 or more months, or be so severe that it might be expected to result in death. Now, you can see by putting these three criteria together, this is a very stringent definition of disability. And it goes back to lesson 1 where we talked about the fact that people who are receiving Social Security disability benefits have significant disabilities, and they've had to be gone through this 3-concept test to prove that the disability qualifies them for benefits. And these are no easy tests to go through. So what's the process like? Well, first of all, you go to the Social Security Administration and you complete an application, okay? And you submit all of these medical records and all of this information on your application, and the determination of whether or not you are disabled is not made by Social Security, but rather by agencies in each state that are known as the Disability Determination Service. Social Security contracts with these agencies in each state to make the medical determination, to check the listing of impairments, to gather all those medical records, to review those records in comparison with the listing of impairments, and then to make the determination, yes, this person meets this requirement or not. So DDS, not Social Security, is the one who actually reviews the medical and non-medical evidence to render that determination about whether or not you meet Social Security's definition of disability, which we read on that slide a couple of slides back. Something to be aware of, you probably already realize this, the determination process can be lengthy. It requires a lot of medical records. Some people don't have their medical records. Social Security needs to then send them to a physician or a specialist to review their medical condition. That takes time. All the records have to be gathered. They have to be sent to DDS. The medical review team at DDS has to review all of those records and then render a determination. So that process can take months and in some cases even years if there's an appeal. And that moves us to the last point on this slide, which that these are initial determinations, and all initial determinations within Social Security world are subject to appeal. And there's a very specific process that individuals have at their disposal to appeal a decision. If, let's say, Social Security denies someone the eligibility for benefits, you can submit an appeal. And there's a very structured process by which that appeal moves through. We're not going to cover that in this training. In your additional resources, we have provided you with some summary information about the appeals process if you want to look that over. So something else that's interesting about Social Security policy that you may not have realized is that Social Security makes a distinction between people who qualify based on a disability and then people who qualify based on something they call statutory blindness. It's not just one disability, it's very separate and distinct. So you can either establish eligibility as a disabled individual or through statutory blindness. And as I said, these are separate distinctions of disability and how you become eligible. There are very separate and distinct eligibility categories, and there are different criterion that individuals meet in order to be found eligible for benefits based on statutory blindness. Now, Social Security's definition of statutory blindness is very specific, and it's unique to the Social Security Administration, and this is very confusing to people. So they think, oh, well, I'm getting services from the state VR agency because I'm blind. Aren't I going to be considered statutorily blind for Social Security purposes? Maybe, but maybe not. Their criterion for this is their own, and it's very specific. Again, it's not something we will cover in great detail in this course, but if you'd like to read the definition of statutory blindness, it's certainly available. It's in the listing of impairments, which we described earlier, and you can go to Social Security's website, search for that, and then find that definition if you are curious about what that is. Now, the different criteria are applied to statutorily blind individual during initial application, and there are also some very specific rules after an individual has been found eligible for either a Title II disability benefit or SSI. There are different rules for folks who are statutorily blind. Something definitely to be aware of. So if you're working with people who have a visual impairment, it would be important for you to know, does this person meet the statutory blindness definition for Social Security? Because there are some differences in the way the benefits work, and even, as you'll see later, how work can affect those benefits. So a very important distinction to be made. So let's look at a sort of a comparison, a little side-by-side comparison of the two disability programs. On the left here, you have the Title II Social Security Disability Benefits. And again, when Social Security talks about the Title II benefits, they kind of refer to all of the little benefits under this category as SSDI, just because it makes it easier. But there are actually three different types under this umbrella. So it is an entitlement program. It's based upon insured status. So you know that amount of your paycheck that is reduced every time you get a paycheck, you're paying those Social Security taxes, and it's sort of like an insurance premium that you're paying every month. And when you have insured status, if something happened and you had to stop working because of a disability, then you would have the ability to draw a benefit off of your own work based on your insured status. So think about that every paycheck that you get, that deduction, that FICA deduction that you're paying, that's really an insurance premium. And it's a good way to think about that. Now, under this broad umbrella, there are three different types of benefits that can be awarded, and I bet you didn't know this. One of them is SSDI. The other is something called childhood disability benefits, and that's when you're actually collecting not on your own work record, not because of the insurance premiums you paid, but you're getting paid a benefit based on the premiums your one or more of your parents paid. So it is possible to collect a disability benefit off of a parental work record. We'll explain all of these in detail in a minute, but for now, just to know that. And then finally, disabled widow or widower's benefits, and these are the rarest. You don't see these benefits that often, but they certainly are out there. And these are a form of Title II disability benefits available to an individual whose spouse was insured and is now deceased. And it's a way to collect disability benefits off of the work record of a deceased spouse. So I bet you didn't know that was out there, but it is. And then finally, the Title II programs come with Medicare coverage, and this is a federal requirement. There's no state variance here. Medicare coverage after a specific waiting period, and we'll describe that waiting period in a little while. But there's people think that when they become entitled to a Title II disability benefit that Medicare comes right away. It doesn't. There is a 24-month waiting period after the month in which you become eligible, and then Medicare is available and people can enroll. That's the Title II side. Okay, so close that door, and we're going to look at the Title 16 side, the SSI side. And this program is completely different. Really, the only thing that these two programs have in common is that adult definition of disability. Truly, that's the only thing those two programs have in common. Beyond that, they're completely different. They function very differently. Eligibility for the two programs is very different. They are completely separate and distinct. Now, the SSI program is an income support program. It is the benefits that are paid to people on SSI. Those benefits don't come out of the Social Security Trust Fund. They're paid for out of basic federal tax dollars. You know, that wonderful check that at least I write every April 15th, general tax dollars, and it's an income support program. And it's strictly means tested. That's an odd phrase. What does that mean? It means that you have to have income and resources, countable resources that are under prescribed limits in order to establish eligibility. So they are means tested. That's part of the eligibility process. Not only do you have to meet the disability requirement, but you have to meet an income test and a resource test. We'll talk about all that too in a little bit more detail. And then in most states, but not all, okay, but in most states, if you establish entitlement for SSI, you become eligible for SSI, that comes with Medicaid coverage. But I want to warn you, there are some states where that isn't true. And so Medicaid is very different state by state, whereas Medicare is truly federal, and it's the same whether you live in Hawaii or Maine or wherever. The Medicaid program can vary significantly by state. And in some states, even though you may have qualified for SSI, there are additional qualifications for Medicaid, so it's something to be aware of. Now, we do provide you with some resources about Medicaid. I think it's in lesson 4 or 5, where you can go and look up more information about your state Medicaid program. That's something you probably want to do at some point. So let's jump into the Title II disability programs. Remember, those are the insurance benefits, right? The ones that someone is paying an insurance premium. That's the FICA tax that comes out of your paycheck, right? That's what that is. Title II disability benefits come in 3 very different flavors, and we're going to cover each one. So where did these come from? Well, they were created by Title II of the Social Security Act, and the legislation was passed in 1937 as a means of partially replacing wages that are lost due to retirement or death of a wage earner. Now, that huge program was established during the Great Depression by FDR, right, Franklin Delano Roosevelt, and as an add-on in 1956, there was inclusion of disability benefits or disabled workers benefits. So that wasn't part of the original legislation. It was added almost 20 years later. Now, Title II of the Social Security Act, that includes all of the benefits really except SSI. And if you have any familiarity with Title II programs, you'll know that it's retirees, it's people with disabilities, it's dependent family members. There's, you can get benefits based on disability, but also retirement for family members and deceased workers. So it's big. Title II is the bulk of the Social Security benefits, everything except the SSI program. So let's look at each one, because there's 3 different ways that you can qualify for a Title II disability benefit. Now, remember, there are lots of Title II benefits that have nothing to do with disability, right? Like retirement. There are certain dependence benefits that people can get that have nothing to do with the individual being disabled, the person getting the check. This course is really focused on those benefits that are based on disability. The first one, the most common one, the largest group of beneficiaries in the disability pool would be those receiving Social Security Disability Insurance, or SSDI. Now, this is a benefit paid on your work record. So you go to work, you make your FICA contributions, remember that's your insurance premium, and you can collect a benefit on your own Social Security number if you pay into that system a sufficient amount so that you have insured status. Now, you have to have at least 20 of what Social Security calls credits in the 10 years prior to the onset of your disability. And this is kind of a confusing point. You have to have worked enough to have general insured status. But to be insured for disability, you have to achieve another criteria in addition to that. Your credits, a certain number of your credits, have to be recent. Okay, so 20 credits in the 10 years prior to the onset of disability. And you earn a credit when you earn a certain amount of money. You can earn up to 4 credits in a year. It used to be called quarters of coverage, right? So 4 in a year, and no more than that. You can't earn any more than 4 a year. The amount of money that generates a credit, that earns you a credit, changes every year. And that's available on some of the resource materials that we provide in the web course if you want to look and see what that amount of money is. Now, an interesting thing about the SSDI program is that if you become disabled as a younger person, like under the age of 31, you don't need as many credits to qualify. Okay, so just something to know that as a younger individual, you don't have to have as significant a work history as someone over the age of 31 would need in order to qualify. And you know, that makes sense because if you're young, you haven't had as many years to have worked, right? 4 credits can be earned a year. Credit is earned when a certain dollar amount of earnings is accrued. And again, that figure changes every year. Benefits can be paid retroactively in this program, all the way back to the date of what Social Security calls the disability onset, the date on which your benefit met the disability criteria, or 12 months before the date that you applied, whichever is less. That's something to know because sometimes people wait a long time after they become disabled to apply, and unfortunately they miss out on some critical cash supports that they could have had. So a piece of advice that we give to individuals who become disabled and are unable to support themselves by working is to apply as soon as possible so that you can retroactively get those critical income supports to keep yourself out of financial distress. Now, something important to know in this program is that when you apply, if you're found eligible, there's a 5-month waiting period before cash payments can begin. This is just something to know. So if I applied today and I'm found eligible backwards in time, retroactively, from the date of eligibility, I have to serve a 5-month waiting period before checks can start. All right, that's just something to know. There's no way to waive that. It just is what it is. And then Medicare begins, or you can enroll in Medicare 24 months later. So you have to pass the 5-month waiting period first, then you have to serve 24 additional months, 2 years, right? And then you can enroll in Medicare. That's SSDI. Now there's another one, Childhood Disability Benefits, or CDB. Now, something to know about this is it used to have a different name, and if you're an old-timer like I am, you may remember when this benefit was called DAC, D-A-C, or Disabled Adult Child, and sometimes you'll hear it referred to using those old terms still, but the current name via the regulations is Childhood Disability Benefits, or CDB. And this is when an individual with a disability is collecting a disability benefit off of the work record of a parent, all right? So to be eligible for this, first of all, you have to meet the disability requirement, right? That adult disability definition, or statutory blindness, right? That never goes away. That definition applies regardless. But beyond that, the individual must be 18 years of age or older, and That seems like it wouldn't fit, but that is the rule. In order to get childhood disability benefits, you have to be at least 18. The childhood word comes from the next criteria. Your disability, based on Social Security's definition, has to have started before the age of 22. Okay, so the disability was established as a child, right, before the age of 22. And you have to be the child of an insured worker, someone who is now disabled and collecting Social Security, or retired and collecting Social Security, or deceased. So it's sort of like that parental work record becomes open to you as the disabled child once the parent either passes away or starts to collect a Social Security benefit based on retirement or based on disability themselves. Then if you, the child, meet the adult definition of disability and these other criterion, you can apply for CDB, right? Childhood Disability Benefits. Now, there are some impacts of marriage in this program, just something to be aware of. So if a child marries, and I know they're not really children to us because they're over the age of 18, but if you receive CDB and you marriage, there can be an effect, you get married, there can be effect on your entitlement to benefits. Certainly just something to be aware of. There are some exceptions. There are certain individuals that will not cause an impact on the benefit, but certainly something to be aware of. Now, one of the cool things about CDBs is there's no 5-month waiting period. So I can go and apply, I'm 18, and if I'm found eligible, then the benefits can be payable to me from the month of application forward, assuming that I apply when I'm 18. Okay, that's nice, right? No 5-month waiting period. And benefits are not payable at all prior to the month in which a beneficiary turns 18. So it's just something to be aware of. I know it's called Childhood Disability Benefits. You have to be at least 18 to collect these, all right? Now, lots of people that you're working with who are getting a Title II disability benefit are getting this, and you may or may not know it. You do need to know, or those of us who do benefits counseling, we need to know, because there are some differences in the way that SSDI and CDB work. Okay, so there are some distinctions, and it's important for you to understand that the Title II benefits are not all one thing, right? 3 different programs under this big umbrella, and that takes us to the next one. Now, we're not going to cover DWBs. That's disabled widows or widowers, and there's a reason we're not covering that in this course. It's a very small population. The last time I looked at figures, it was under 300,000 people nationally who received that benefit. So it's rare. You don't run across a lot of these beneficiaries. It's something for you to know that it is possible to collect a disability benefit off of the work record of a deceased spouse. There are some requirements about it. So that's as much as we're going to say about that. If you have a desire to know more, check your additional resources and certainly contact maybe your local WIPA providers, and we can help you with that. So some things to remember about the Title II disability benefits, the CDB and the SSDI. They're a form of insurance, right? So there's no means testing. That's the second bullet, and that's really important to know. Although work and earned income might affect your benefit and your eligibility, Social Security has no interest in your resources or assets or things that you own or unearned income that you receive. This is an insurance program. No matter how much you may have in assets, if you became disabled and you met the requirements, and you were unable to support yourself by working, this is a benefit that would be available to you no matter how much you had in the bank, how much you owned. Okay, it's not means tested. No limits on resources or unearned income. Now, the amount of the disability benefit that you get is based on a complex formula that you don't need to know. I don't know it either. And it is totally determined electronically at the local Social Security office. And it's based on the number holder's work record. So if it's SSDI, the number holder is me, right? My own work record. If it's based CDB, it's based on the work record of a parent. Okay, so complex formula, you don't need to know how to do that. It's all calculated when you apply, and the work history of that number holder is considered. Now, The SGA amount is how much earned income is countable, and it's a guideline when Social Security is determining eligibility for benefits. So it's simply something to consider. And here's the reason for that. Remember what these programs are for. These are wage replacement programs. Remember the definition of disability, right? There's a earnings test, and there is medical requirements and a duration requirement that you have to meet. And so if you are able to support yourself by working, then you may not be eligible for these benefits. So Social Security will look at countable earned income when making this determination, and that's all based on comparing it to a guideline, the Substantial Gainful Activity Guideline. And again, there are numbers associated with the guideline. We are not putting that in the lecture. We have provided you with supplemental materials that shows you the SGA guidelines for this year and then for past years so that you have that information to refer to. All right, we're going to shut the door on the Title II programs. One of the most common mistakes that people make when they're not experienced with the disability programs is they get the Title II disability benefits confused with the SSI benefits, and they start to apply the rules that go to one to the other mistakenly. So something you have to get used to doing is keeping a wall between the information for one program and the information for the other program. So we're going to shut the door. The Title II disability benefits are done for now, and we're going to talk about the Supplemental Security Income, or SSI benefits. Remember, completely separate program. The only thing that SSI and the Title II disability benefits have in common, really, is the adult definition of disability. Everything else is different, all right? So you got the door shut, and let's move into some basics. So the SSI program was created in 1974 by the passage of Title 16 of the Social Security Act. A lot of people don't realize that this wasn't, part of the original disability legislation from 1956. It came almost 20 years later. And just a little history program, the way that this all was established is individual states had income support programs for people who were blind or disabled. And the SSI program, when it was passed, was sort of the federalization of all of those disparate income support programs that were all over the country. And it kind of provided beneficiaries with a national floor for a program so that there was more consistency. So it wasn't in California, it's like this, in New York, it's like this, in Alabama. It made it much more consistent across the country, and it federalized this income support for people who were disabled or blind who didn't meet the criterion for the Title II benefits, right? Because lots of people haven't worked enough to have ever established insured status, right? So folks maybe that became disabled in childhood, or folks that were born with a disability, there would be no way for them to qualify for a Title II benefit if they hadn't worked, right? So there was kind of a gap, and this income support programs all around the country filled in that gap, and in 1974 the SSI program was established to kind of federalize all of that. So it is a needs-based program, right? Means tested, we talked about that. And it's a program that provides a very basic level of income support to cover the costs of food and shelter. Okay, so it was not intended to be, a do-all, end-all. It's very sustenance level income support to pay for the basic costs of food and shelter, and it's available to individuals who meet that adult definition of disability if you're over 18, right, and who have very little income and few, if any, countable resources or assets, right? It's that means-tested income support program, completely different from the Title II benefits, which are insurance, right? It's a wage replacement program, but it has nothing to do with unearned income or resources. This program definitely is affected by unearned income and resources. It's also what the federal government refers to as kind of the payer of last resort. So before an individual is provided with an SSI benefit, when you apply for SSI, Social Security is going to look to see if you might be eligible for any other benefit. Maybe you're eligible for SSDI. If so, that would be processed first. And if you're still eligible for a little in SSI, that could fill in. But it's really important to know that. And, sometimes when people apply for SSI and Social Security says, well, you have to go apply for this unemployment insurance because you were laid off, or you may have railroad retirement benefits, you need to apply for those first. They don't understand that's required by federal law. You have to go apply for any other benefit to which you might be entitled. Get that processed first, then come back to the Social Security Administration and they'll determine your eligibility for SSI based on that. And again, the funds that go into that monthly benefit come out of the general federal tax dollars, right? The general fund, not out of the Social Security Trust Fund, which is funded by those FICA contributions. Remember that chunk out of your paycheck every month. So how do you become eligible for SSI? Well, you have to either be aged, and that's their word for it, which means to be 65 or older. And as I rapidly approach 65, that feels awful. But this is a benefit not just for people with disabilities, but it's a benefit for people who are elderly who may not have the ability to get a retirement benefit out of Title II. We don't think about that, but there's a lot of people out there for whom the Title II benefits aren't available, right? They just don't have that attachment to the workforce. They haven't established assured status. So this was a benefit for elderly individuals, 65 and older, or blind individuals. And here's the criteria: 20 or 200 or less in the better eye with glasses, or a field of vision of less than 20 degrees. That's the official definition of statutory blindness. Or disabled, right? The medical disability definition per that listing of impairments, right? You have to go through that medical review, and you have to meet an earned and unearned income tests. You have to meet a resource test. You have to meet certain citizenship and residency requirements, and in today's world, that gets kind of complicated, so we're not going to provide a tremendous amount of information in that area, although we have provided you, again, with places you can go to read more about that if you need to. And of course, you have to file an application. Now, there is a big difference, again, between the Title II disability programs and SSI. The SSI program does not provide retroactive payments. So let's say that I go and apply today. If it's the middle of the month, then if I'm found eligible, then I will be paid a benefit for the next full month. No partial months are paid, and there's no retroactivity. Just something to know, a big difference between the two programs. Now, people get all different amounts of SSI. There are certain amounts, certainly in the federal payment, that you'll see over and over and over again because there is a federal benefit rate called the FBR. You can see that here on this slide. And that is the maximum amount in federal SSI payments that an individual can receive. And that FBR figure changes typically every year, not always, but most years it goes up. And we're not going to include those amounts in the lecture, but again, those figures are provided for you in the lesson readings and or the supplemental readings that are there. So if you're interested in finding out what is this year's FBR, what was last year's, that information is provided for you. Your FBR is one thing that can affect the amount of your check, because you can't get more in federal SSI than the FBR. That's just how it works. Your earned income can reduce the amount of payments that you get, because there's a mathematical formula that Social Security uses to reduce your SSI payment based on how much countable income you have. And get ready, that word countable, you just heard it, you'll hear that again and again and again through lesson 6, because there's all kinds of calculations that Social Security uses to deduct certain things so that your total income may be one thing, but how much is counted when Social Security reduces your SSI cash payment is another, right? So that's good, but that's where it gets a little complicated and it involves a little bit of math, all right? Not hard math, but basic math. So wages, net earnings from self-employment, and even in-kind items that you receive in lieu of pay, you've all heard about jobs where you might get room and board or as part of your compensation package. That would count. The value of that room and board would count as earned income. Unearned income, the definition of this is really simple. It's any income you receive that's not earned is unearned. All right, so that's basic. And you can see the means testing here, right? So it's not just a wage replacement program. It really is means tested income support program, looking at all of the things that you're bringing to the table and adjusting that cash payment accordingly. Now there's a very interesting group of regulations in SSI law or policy that's referred to as in-kind support and maintenance. And it's complicated, but basically, remember that SSI is used to pay, it's intended to pay for the basic cost of food and shelter, right? So if someone else is helping you pay for food and shelter, that is called in-kind support and maintenance. And it can cause the reduction of your SSI cash payment. There are so many complex rules around that. That's kind of like the most that we say about it. We do provide you with some additional resources, and I think we covered this in greater detail. We do in lesson 4. So if you have a dying need to know more about in-kind support and maintenance, we'll cover it to some extent then. And then finally, your check can be reduced by an overpayment recovery. As you can imagine, sometimes people forget to tell Social Security that they have a certain type of income. It's not discovered till later, and by then, they've been paid more in SSI cash payments than they should have been. So you then have to pay that back to Social Security. And one of the ways that Social Security can collect the payment is to reduce your SSI cash payment. There are multiple ways, but that's one. So you can see an SSI cash payment reduced. Now, interestingly, you can see SSI cash payments affected by one of these things, 2 of these things, all 5 of these things. All right, so it can get kind of complicated. So sometimes it's hard to know why is this individual's check the amount that it is, and that's one of the things that WIPA personnel, a CWIC, can help you with is verifying what someone's getting, why they're getting it, and what the reductions are, why the check is being reduced. All right. So let's talk a little bit about understanding concurrent beneficiaries. And you may not even know, you may not be aware that an individual can receive a Title II disability benefit like SSDI or CDB and SSI as well. But it's very common, and because these individuals receive 2 different benefits at the same time, concurrently, right? We refer to them as concurrent beneficiaries. So let's take a look at them. You need to know this because they are common, and you'll have people tell you, I get 2 checks from Social Security every month, and that's an indicator you may have a concurrent beneficiary. So what is it? Someone who is entitled to a Title II disability benefit, right, SSI, CDB, or DWB, the rarest one we didn't really cover, and is also found eligible for SSI. They get 2 separate checks each month. Okay, and in most cases, they even get the checks at different times in the month. Now, sometimes beneficiaries don't even know that because their checks are deposited automatically, and they just know that it goes into the bank. They don't know what days those deposits are made, or really the fact that they even get 2 checks, but it is common. And they're eligible for both Medicare after the required waiting period and Medicaid if in your state, the individual meets the requirements for Medicaid. Remember, in most states, establishing eligibility for SSI does result in Medicaid eligibility, but not 100% of all states, okay? Some states do not. You have to meet additional criteria to get Medicaid. So what causes the 2 checks? Why are some people concurrents? Well, remember how we talked about SSI being the payer of last resort, right? Well, when someone comes in to apply for the SSI program, Social Security will always check to see, maybe this person is eligible for a different benefit from Social Security. Maybe they're eligible for a Title II benefit, and they'll examine that first. And if there is eligibility on that side of things, that benefit is afforded first, right? Because SSI is payer of last resort. So typically, the person may have eligibility for SSDI or CDB, and let's say that check is small, and it's because the work record that the person is drawing their benefit off of wasn't significant. So if the amount that you are to be receiving from your Title II check is under the federal benefit rate, it may be that some SSI could be supplemented there, okay? If you establish eligibility for that program. And remember, that program requires a resource test, earnings test, all of that stuff, right? So you can also start on SSI, which does happen sometimes. An SSI recipient is happy collecting their SSI check, and then something happens to initiate eligibility for a Title II disability payment. And I'll tell you, a common occurrence is the death of a parent or the retirement of a parent. Remember, that could trigger eligibility or possible eligibility for childhood disability benefits. And if you're already on SSI, there's sort of a flagging that occurs within that system. And the Social Security employees, this person may be eligible for this Title II check, so we're going to send them a letter and ask them to come in and apply for that. And remember, SSI is payer of last resort. So if there's a Title II benefit you could be entitled to, they will require you to complete that application process, and then your SSI will be reduced accordingly once you get your CDB, right, or SSDI. Now, the SSI check, as I said, is reduced due to the fact that you're now receiving a form of unearned income. That's the Title II check. All right, so now you know. Title II disability benefits, 3 different flavors. We really only covered 2, right, SSDI and CDB. You've got this whole other program called SSI, very different, right? And some people get SSI, and then some people get both. So let's summarize where we've been. That wasn't so painful, right? So, lesson 2, we're just giving you the overview, right? The lay of the land. And then in the next lesson, we'll move into the specifics of one of the benefit programs. And the next one, we'll start with the Title II disability benefits, right? CDB or SSDI. And we're going to talk about what happens to those benefits when people go to work. But you have to have the overview first. We had to explain how the 2 benefit programs are different, the eligibility requirements for those 2 programs. Remember, the only thing they have in common is the adult definition of disability. We've provided you with lots of additional resources. From this lesson forward, it's a little bit overwhelming even. We provide you with some standard readings that we hope that you do complete prior to watching the lecture, participating in the lecture, and then lots and lots of additional resources for you to gain more information in areas of interest to you. So we have some links to websites, excerpts from the CWIC training manual, which is available online for free. We provide you with a link for that. If any of you are interested in reading that, it's available to you. And the next lesson is we're going to take a look at that Title II side of things, and we're going to dig in to the effect of earned income. So on to lesson 3.
Thank you. Thank you, Lucy, for actually a very informative presentation. A couple of pieces, and then I will turn it over to Jennifer that will tell you about the evaluation forms and obtaining CRC credits for this particular webinar. You can get a shot of me if you'd like. Couple of things. June 19th, 10:30 Central, and those of you that have registered for this webinar, as well as previous webinars, will get a notice of this. We have monthly discussion calls in our Project E3. On the 19th of June, part of the conversation, Lucy has agreed to join us and will be available to answer specific questions you may have on at least materials covered to date and other questions you may have around the issue of disability benefits. Lucy mentioned lesson 3, which is Title II disability benefits. That will occur on June 27th, the same time as this particular webinar. And because you've participated or at least registered for this webinar, you will get a notice from us to connect as part of that. With that, Jennifer, would you like to explain to people about the evaluation form and CRC credit? And again, thank you everybody for participating.
Thanks, Terry. Hello everyone, I'm Jennifer from SVRI, and I will be helping you obtain the CRC that is available from today's webcast. All of our webcast resources are housed within our Community of Practice, or COP. I just added, or Heidi just added, the COP link in our chat box for your access. Here you will find the archived webcast, any handouts, and the evaluation. Within the evaluation, you are able to request the CRC. An email is going out next week to all registrants with more detailed instructions as well. Terry?
Great, thanks, Jen. So with that, we are done for today. Thank you everybody for attending. Again, June 27th, our next in this series, Title II Disability Benefits. And if you are interested in, if you're interested in talking with Ms. Miller specifically about questions you may have, she will be on our call June 19th, which will be 10:30 to 11:30 Central Time. And as I said, by registering for this webinar, you'll get a notice of that particular phone call. So again, thank you everybody. And we have 3 open questions. I noticed don't close down. So I will let Heidi and Ms. Miller proceed to answer some of the questions that are in the Q&A box. So we have a raised hand as well. I'll see if I can, while you guys are answering the questions, let me see if I can find the raised hand piece. So go ahead, Heidi. You know, if you want to come on, maybe Heidi, if it helps to be on the phone, that might be.
Right now, we only have 2 questions left in the Q&A box that Lucy is answering right now as we speak. So
Great.
That's working fine.
We can clearly stay on for, so again, obviously, officially the webinar is done for those of you that may have other pieces you need to get to or meetings and at the top of the hour. But we will keep it open until the top of the hour for Lucy to answer the currently open questions. And if someone has another question, please put it in the Q&A box, and we will keep the site open for another 7 or 8 minutes. So again, thanks everybody, and please join us again June 27th.